Well, after a couple months of pretty significant weakness on trade war and tariff worries, we've actually had a couple of weeks where the market has come back pretty nicely. Does that mean that this stock market crash is over, or is there more to come? Well, I'm going to show you the chart and how to analyze it and talk through a few important concepts that if you understand them well, you can do a good job of predicting the market in the future. Plus, we'll do my normal market analysis and we'll look at the trade of the week. All right, so let's dive into this question whether the stock market crash as motivated by tariffs is in fact over. As I said, we've had a couple of weeks of pretty good strength. And we're going to look at the chart in just a moment, and we're going to look at it in the context of the trend, of volatility and what that means, and of human psychology. So let's jump right into the chart of the S&P 500. And we always want to start by drawing trend lines. And the easiest way to do that is to start where an upward trend or a downward trend begins. So we can start here. And we're just going to let this fall in like this. We won't worry about this just yet. So when we were way down here, the first important concept is that this was fear. Fear-based selling caused price to move far below the trend line, which meant it was oversold. And I have something I like to use called a dead cat bounce candle. Anytime price runs down and away from a trend line, closes above its open after hitting a new low, like it did there in early April, it's a pretty good sign that the market's going to reverse. And that's, of course, what happened. Now, what we did is we came back up to the trend line, got stuck, built a rising bottom. So what does that rising bottom mean? It means that the buyers are starting to take back control. When you have an upward trend, you will find that the bottoms are rising. And when you have a downward trend, you will find that the tops are falling. Well, now we're starting to build those rising bottoms, and we have broken the downward trend line. We talked about that in the last few weeks, and make sure you're subscribed to the Stockscores YouTube channel. I'm doing this analysis every week. Just click on that subscribe button so you can get your notifications when I upload the next video. All right, so we have made the break of the downward trend line, but the third concept I want to mention is of volatility. So when you have lots of volatility like we've had, even in the last 2 weeks, yes, we've moved to the upside, but there's still a tremendous amount of volatility. What volatility really means is that investors are uncertain. If you compare this volatility with what we had over here, you can see that we have significantly more. And that volatility, again, identifies a market where investors are very uncertain. So, yes, we've broken the downward trend line from a rising bottom. That's what I've been telling you to look for. And that's great. But we do so from a lot of volatility. And that means there's still a very good chance that we're going to get another pullback. And it makes some sense in the context of what we know is going on in the market, because we know there's still the chance that these tariffs are going to stay in place. You know, countries have been given 90 days or whatever to come up with a plan to equalize tariffs between countries. And if that doesn't happen, then you should expect that there's going to be more tariff comments made by President Trump. And what that will do to the market is going to create more volatility. So I love that the market's broken the downward trend. I love that it's built a rising bottom. Those are good signs. But it is still very volatile, and that means there's still a very good chance of a pullback. And I would consider pullbacks to be buying opportunities, because every time we get a sharp pullback, one that's really emotional, we tend to see a bounce back from it. And so if you're a shorter term trader in the market, or if you're looking to buy bargains, then wait for those pullbacks. I would not be jumping in now for bargain hunting, because the bargain hunting was back when the market was oversold, or maybe when we started to break up from that rising bottom. Right now, we're more likely to move lower. And it's quite likely that what's going to happen is price is going to run up to this downward trend line, or sorry, this horizontal line of resistance, get stuck there, pull back to the trend line somewhere down in here, and that'll be a place to think about looking for buying opportunities again. All right, let's get into this week's market analysis now. And we've already looked at the S&P 500 chart, but I'm going to just look at it on different time frames now. So this is the 1 month chart, and you can see there that the trend is up, but this is very important to notice. Notice how the bottoms are rising at about that pace, and the tops are rising at a shallower pace. This is a pattern called a rising wedge. And it's an indication that the buyer enthusiasm is diminishing. Here you had some pretty strong enthusiasm on the bargain hunting phase when people were eager to snap up cheap stock. But now that pace of rising bottoms is slowing, and that's why I think we could still get a little bit more of a pullback. So yeah, we could go up for another couple days before that happens, but I want you to be cautious about that. Looking at the 3-year weekly chart, we are not breaking from a rising bottom on the weekly. So that's why, again, wouldn't surprise me if we pull back before we try to get back to those all-time highs. Now, the long-term trend has held. There's your long-term trend line. Hit it once, twice, 3 times, now 4 times. So that's held. That's a good thing. But are we going to move back to the highs? Probably eventually. But are we going to make a little pullback first? I think that's quite possible. Let's move along to the NASDAQ 100, which is a pretty similar chart. It got hurt more than the S&P 500 market. But like the S&P, it's been moving up, but the pace of the upward move is a little bit lower. On the 3-year weekly chart, here you can see that the 3-year weekly chart was broken on this time frame. And so the break of that upward trend line is a bit of a negative. I think the tech stock market is likely to underperform the broader market, maybe because so much of their business is related to China, a lot of the manufacturing there, and maybe the tariffs are going to have a stronger effect on tech stocks. All right, moving along, let's take a look at the Russell small cap market, and it has been in more of a downward trend. It is still below the downward trend line, and it's making that comeback. It's going to find resistance here. So when it gets there, could be this week, probably going to see a pullback. But then if it can build another rising bottom and make another stab at this from some lower volatility, then the recovery should be in. All right, let's move along to the Canadian market now. T.XIU is the symbol. And you can see there, also sharp pullback. They're very oversold. Just always know oversold is the distance from the trend line. So quite oversold, has come back, broken the trend line, coming into this resistance here. So I think that it's likely to pull back soon. Maybe not Monday, but it could be later in the week. All right, moving along to gold. GLD is the symbol. And I think gold is probably topping out a little bit. So we had the trend here go from linear to parabolic. And just like an oversold market is one that's far below the trend line, an overbought market is one that's far above the trend line. And so I think we're going to see gold pull back to the trend, bounce. Then the question is, does it just go sideways for a while, or does it build a falling top and break down? For now, I think that in the short term, gold is likely to pull back. The long-term trend is still up. If we look at the 3-year weekly chart, you can see that we're still in a nice, strong trend. But, we're just far above the trend line. That means the gold market went up on a little too much emotion, a little too much of the fear of missing out, and that sent prices too much higher. So look for gold probably to continue its pullback. On oil, quite a bit of volatility, and if we look at the 3-year weekly chart, you can see that downside volatility. I think oil's a bit oversold. It's in this support zone here, and so it should make a little bit of a bounce back in the short term. If we look at the 1-month chart here, we need to see some rising bottoms start to build before you get too enthusiastic about trying to buy bargains in oil. Let's take a look at currencies. The US dollar has really been beat up through this tariff war talk. You can see it's heavily in that downward trend. If we look at the 3-year weekly, we can see that it has fallen to support right here. So it should hold that and bounce back. But I think that in general, it's a pretty pessimistic market for the US dollar. On the Bitcoin front, well, this is an interesting chart because when you look at the daily time frame, it doesn't look all that great. We have broken this little downward trend. That's a good thing, but it's not from a rising bottom. But what I like is the 3-year weekly chart, because on the 3-year weekly, you can see this long-term upward trend line has held. We went up, pulled back, hit it, got overbought, pulled back, and bounced. And we should now at least move up to these highs here before we find some resistance. So the long-term picture for Bitcoin is pretty good. TLT is the bond market, and this will have a real good influence, particularly on the small cap stocks, because they are interest rate sensitive. And if we go to the 1-month chart, just to see the general short-term trend, it's kind of sideways, generally falling here, but in the last couple of weeks starting to build some rising bottoms, so some stability coming into the bond market, but it's also kind of stuck in a sideways range. We need to start to build some rising bottoms, and that'll happen when the market really thinks that the interest rate policy is going to get a little better. So let's take a look at my ratings then on US stocks to begin. US large cap neutral, NASDAQ neutral, US small cap neutral on all time frames. Lots of volatility, which makes it a little difficult to predict. I think probably we'll see a little bit of a short-term pullback, but the longer-term outlook is getting better. Canadian stocks short-term bearish and long-term neutral. Gold, I'm now putting it down to neutral on both time frames. I think we're going to see more of a pullback toward that long-term upward trend line. Oil bearish in the short term, neutral long term, same for US dollar. Bitcoin back to bullish on both time frames, and bonds neutral on both time frames. All right, let's take a look at the trade of the week. This is the stock that we traded in the active live service on Stockscores.com. You can learn more about that at Stockscores.com, and make sure when you're there you register for my free weekly email newsletter. Registration is on the homepage of Stockscores. It's free. I have stock trading ideas. I pick some stocks and I teach a little bit about how to trade the market. So let's get into this week's day trade of the week. And this was one where it started to behave quite abnormally in the pre-market on Friday. And it made this break right here. Coming into the open at 9:30, it was in a pullback and it broke the pullback. And you can see that there's a little blue dot there. That's an indicator I created called a wave up indicator. And it looks for a pullback to be enough that it recharges buyer interest. And then with this abnormal volume, the stock went for a really nice run to the upside, moving from 50 cents to over $1, so 100% gain in less than an hour. And that was probably the best trade of the day on Friday. And it's been pretty steady for day trading, even though the overall market is kind of frothy. Every day there's some pretty good day trades. So learn more about that at Stockscores.com. And if you enjoyed this video, please click on the like button. Make sure you're subscribed to the channel. And as always, trade well.